All right, so we're going to talk today about there's a new DLL going out tonight that addresses some things, and there is a chart book associated with that. We'll go over that in a little bit of detail here, and then we'll talk about kind of the bulk of today's session will be about automated adding, and what I've done this week, and we'll be testing next week. All right, so there's a new DLL coming. And what it does is it changes the way that the order flow momentum is calculated. Okay, so you'll notice on this screen, it might be a little surprising. You see these little pink numbers, and you see the blue outline and the pink outline. That's to help me differentiate the old way and the new way. That's part of my testing. So what's going on here is, there used to be, down here, there used to be this 15-second chart, and it's not here now. And the reason is that inside the custom study itself, we are creating sort of a virtual 15-second chart and calculating what we need to calculate there. And what that does is that ensures that the calculation completes and is done before we send anything to the server. And so what was happening is we would see cases where there's a timing difference between when the 15-second chart would complete, when the range bar chart would complete, and then Sierra Chart's own internal refresh rate, and as a result, we'd see some cases where we weren't getting the data across in time. It's clearly an issue. It may not be the only issue that we're. I'm still concerned about just basic data delivery, but this will solve one vexing problem that we've been having, or that some of you have been having. I actually saw it as well. Even yesterday, I saw one chart using the new DLL get the signal, and the other chart not get it using the old way. All right, so here's the gist of what is happening. Instead of that chart, and instead of a study in here, there used to be a study just before here called Bid Ask Dir Push. It's not there anymore. That's because we're doing it inside the predict study itself. All right, so in here, instead of defining the parameters for that order flow momentum calculation as part of the other chart and as part of that other study, you're doing it here now in the predict study itself. All right, so for the NASDAQ, it's 15, 15, 15, and it kind of doesn't matter so much what those mean, but that's what this is where it is now. All right, this hasn't changed in years. It is different for each market though, so you do have to watch that. So you'll see that in the ES chart, it's 15, 110. All right, and what they're doing is they're calculating the momentum from the time chart and then applying it to our price-based range bar chart. All right, so those values get set here now. All right, and the subgraphs that plot them are now in here also. All right, it's SG7 and SG8. Now this is a development version of the study. It says push up and push down. When you get it tonight or tomorrow, it'll say order flow momentum long and order flow momentum short. Okay, so that's one difference between what I'm showing here and what you'll have in your hands tomorrow. All right. What that means practically is that when the new DLL gets uploaded tonight and you download it automatically when the next time you launch, nothing actually changes for you until you go and tell the system, okay, I want you to use this new method. Okay. And the way that you do that is you change the data that you're sending to the server. All right. And we do that in this setting here, this subgraphs descend setting. All right. So what I'm going to do is just produce a chart book that you can use, and it has everything in it correctly. Okay. So you just download the new chart book and it'll work. Okay. If you have a chart book already that's got a lot of your own customizations in it and you really don't want to have to remake them, you can just change this subgraphs descend string to be correct, and now you're good to go. All right. So in the download package will be a text file that has the correct string. All right, which you'll just need to replace here. So it'll just be you'll just select all this, all right, and then you'll replace it with this string, right? If you don't want to use the downloaded chart, if you want to keep your existing chart. And what's happening is there's two values that we were getting from that 15-second chart and sending, and now we're getting them from here. And so we have to tell the study, hey, send the order flow momentum values from the predict study, not from the directional push study. And so if you're curious, we're now sending SG7 and SG8 here instead of what we used to send. Okay. So it's relatively simple if you understand how all that works. If all this is Greek to you, don't worry about it. Just download the new chart book and everything's going to work. Okay. And then that will address the issues that some people have been seeing where the predictions are pretty different than mine. Okay. It's not going to solve all of those problems because some of those are just related to the delivery issues of the data. But this was very clearly one that was a problem that I can solve by a change here. Okay. There is one thing to consider in that this method is slightly more time consuming than the other method if you're loading up lots of data. All right. So like I'll load up 180 days of data to do a replay. And before that would take probably, 15 or 20 seconds maybe to actually load up and calculate the studies. And now it takes another 10 or 15 seconds. All right, so it takes a little bit longer because the chart here is doing more work than previously. So just keep that in mind. If you're loading it up and you go, guys, this is taking a really long time, it's broken. It's not. It just takes a little bit longer. With that in mind, it's worth only loading what you need. There's no need to load 180 days if you're live trading. Just load the last 7 or 14. 14's the default number here. Just 2 weeks, so you can look back 2 weeks basically. All right. Now, so let's see. So instructions will come out, but basically update Sierra chart so that you have the latest version, and that's the standard help menu, download current version, and then download the new chart book, and everything will work. All right. If you don't download the new chart book, it'll still work. It's just that you'll be using the old method. So once you're ready, just switch over, okay? It's not one of those cases like the last time where you had to change everything all at once or nothing would work. It's not like that. If you forget to do it, then it'll still work. It's just using the old method, okay? All right, so now let's talk about the automated adding. So some of you saw me doing this work. Actually, I just left the broadcast going while I worked on it. And what we've done here is added, or rather enhanced the system so that if you tell it to, then it'll automatically add to your position and correctly move the stops and targets and trail so that you can take more advantage of the moves that are bigger in the market. Okay. And so let's see, I think we can probably just use this chart here. I think there's one on here. Yeah, let's use this one here. So this is from Friday. There was a 151 code right here. Okay, let's get rid of all the other lines. There was a 151 code here. In fact, why isn't that there? Oh, because I redid the studies. Okay. And so using the V-bar 2, excuse me, I'm going to sneeze. Hold on. Okay, so there's a 151 code here, which is, you know, a break lower here. This happened on Friday. So it's actually this bar that we're getting that, all right? And then so we wait for the next up bar using the V-bar 2 spreadsheet. So verification bar 2 means I need an up bar for a long in either the signal bar or one of the next two bars. Okay, so we get a clean entry here, all right, after this up bar. And the system automatically adds right there. You know, we're going to talk about the parameters on why it decides to add and what's required in a minute. When it does that add, the new break-even level is about like right here. Okay. And so the system will automatically move the stop to break-even +1. Okay. Now, for all of this to work, you have to have a specific setting set in Sierra chart. So pay attention to this. If you forget everything else, in the chart window here, right over here, on the main tab, not the target tab, on the main tab, there's this little button here with an M in it. Okay, you gotta click that button and go to orders, and you gotta choose support scalene. It's currently unchecked, I'm sure. Okay, it needs to be checked. Right. Clearly, they couldn't find a more obscure place to put it. Anyway, this has to be checked, or this won't work correctly. You'll see it not work correctly, so you'll know something's wrong. All right, so the stop will get moved to here, break even +1. All right, and then you've got a trail defined here that the market's going to trail by, and we have to open it up for this to work because we're getting stopped out on these little pullbacks here. It'll pull back between more than 20 ticks but less than 40, stop us out, and then keep going. All right, so I have this set for 40. This is what I've been testing with. And then what we're doing is there's a separate mechanism that's trailing to the zigzag, and that's these pink lines you see here. The market will trail to there automatically for you. Okay, so there's this automatic 40 tick trail happening. There's a separate trail to the zigzag happening. Okay, so whichever one is closer is the one that's going to get hit. All right. So in this case, we add right here automatically, and again, we'll talk about how and why in a minute. The system moves the stop to break even +1, and then when it pulls back here, the market pulls back, the system moves the stop again. This time, let's make this a different color. The system will move the stop now to here, and then the market pulls back again. All right, and when that finishes, it moves the stop again to here, to the zigzag it's trailing. All right, at this point, the market just rips, right? So now the 40 tick trail takes over, and you'll see the stop just move up behind. Okay, 40 ticks. And then when this happens, you'll see the stop move to there automatically. Okay, so we're trailing to the zigzag or 40 ticks, whichever is closer. All right. Now, one other thing happened way back here when we trailed to break even. When we trailed to break even, we reset the target. Excuse me, I'm losing my voice here. We reset the target to break even plus 80. There's a setting where you define that. I'll show you in a minute. All right. In this case, we actually hit that target right there. And so we're out with 2 contracts. Okay. For basically 80 ticks plus 1 because we all right. So it's like 40 points plus a little bit more. Plus a tick or 2 more. All right. And then in this case, that's a magical exit just by accident. Okay. All right. So lots going on all automatically. And the intention is to continue with the philosophy of I can do this without any human intervention. It's just gonna work. It's just gonna do all the work. Now, let's cover a couple things. When will it start looking to do an ad? You have to have a certain amount of distance. All right, because my goal here is that we never increase the amount of risk that we're taking. We start off with $50 of risk. My philosophy is you can never take more than that. That's the amount of risk I've decided to take in a trade. In fact, I'm trying to reduce the risk. So I want the market to move enough that if I do an ad, the break-even point is now far enough away from the entry that the market it'll still work. All right. So for me, I put it at 30 ticks. So in the spreadsheet right here, there's a minimum ad distance in ticks, which is set to 30. Okay, that's this value right here. All right, you can set it to whatever you want. It's set to 30. So it will not do an ad until it sees that the market has moved 30 ticks. Okay. All right. That's the first thing. Then, okay, well, we don't just add when we've gone 30 ticks. We have to see some sort of behavior in the market that suggests something good is happening. All right. And so there's a bunch of choices that I coded in. The first one is add on break. Okay. And so if there's anything other than a 0 here, I'm sorry, that's not true. If this number is 1 or more, if it's greater than 0, the system will look for conditions where you're breaking through a level. And if it sees it and you're more than 30 ticks away, it'll do the ad. Okay, that's what's happening in this case. Actually, I'm not sure. I don't think so. No, because the break level's up here. Okay, so add on break is the first one. And you would see it breaking through one of these zigzag levels. Okay. The second choice is to add after the pullback. Okay, that's the one that's happening here. All right, so same thing. If it's set to 1, then it'll look for pullbacks. So the point is that you may not like adding on a break. So do that. Now, when you break through, it won't do ads on breaks now. Okay. I just have all of them listed here because for testing. All right. So the next one is add after pullback, and what that means is that when after the market pulls back, when it's here, when this is happening, this part, the wave is complete, and now the pullback is complete. Then do the add. Okay. The third one is add on a runaway. This is harder to see because it's using data that is in the machine learning prediction study. But the runaway means that the speed with which the market is moving is increasing, and the way I've defined runaway is the three consecutive bars show an increase in speed. Okay, and if you see that, in fact, I think that's what this one is. If you see that, then the market will do the ad. If you want to see how often that happens, you can go into studies go into predict and go to the subgraphs. The very bottom is this speed subgraph. If you set it to like value on low or value on high, let's do value on high, it'll print the value. All right, and if it's a 1, that means that it's this bar is faster than the previous one. So if you see 3 in a row, then that's a runaway. That's considered a runaway condition. All right, we're looking for these cases here. All right, where you break through in 1, 1, 1. So this is a perfect example of what I'm after right there. There's too many lines now. That's a perfect example of what I'm after. If I'm in the market and I see 1, 1, 1, I get in, add to the position, because I think it's about to take off. Okay, it shows up at other odd times as well, but this is the key. This is the one we're looking for right there. All right, and then the fourth one is add on a type 2 price reversal pattern. Okay. In all cases, if you make it 1, that means it's turned on. If you make it 0, it's turned off. Okay. So now brakes are turned off, pullbacks are on, runaways are on, reversal patterns are on. Okay. A reversal pattern is a type 2 pattern. This is a rational trader concept. It's this case here where you see 2 bars in the direction, a pullback, and then you fail to break lower and close in that direction. So it's 2 up bar for a long. It's 2 up bars, a move down, and then another up bar. Okay. So this is just something we've seen where I'm in a position and the market shows me this pattern, and that is something I've seen where I want to add there because I'm getting this little mini test in the midst of the move. All right. So those are the 4 cases. Now, and we can put as many in as we want. All right. I did 4 because those are the 4 that came to mind. You can see I have add on something else here not implemented because I just haven't done it yet. We'll see what is good or not good. The question now is, well, how many times will it add? And you get to control that by telling it what's the maximum number of contracts that you want to have in the market. All right, so my order quantity here is 1. Okay, I'm going to place an order of 1. And now when I do an add, I'm going to add 1. And so that, because I have this value set to 2, that means I can add 1. I'm going to add ones. If I set this to 1 or 0, then it'll never add. That's just like trading normally. So this is how it's going to come to, when I release this, it'll come to you like this. This means adding's turned off, because when you open a position, you are in the market with 1 contract already. All right. So if I'm adding 1 contract at a time, and I make this 3, now the system will try and add twice. Okay. I'm going to show this in a little bit. We did this. I did tests for this. If I make it 10, then it'll just keep trying to add. All right. Up to 10 contracts in the market. Now, we've got to talk about this distance bit here, because when you start adding multiple times, you've got to figure out, okay, when's it okay to add a second time? If I wish to have only 1 contract and then trail the zigzag, set all these fields to 0. No, you don't have to do that, Philip. If you just want to trade 1 contract, just set max contracts to 1 or less. And now it won't do any adds. This is just normal behavior, and now it'll trail to the zigzag. Okay, so it's going to trail whatever you've defined here, and it's going to trail to the zigzag. That's going to happen automatically now. I can show you how to turn off the trail to the zigzag. We'll go over that in a minute if you don't want to do that for some reason. Okay. But getting back to here now, the minimum add distance is 30. Okay, what that means is that when I see a behavior that says, hey, I can add here, I look at the distance from that point to that point. And if I have 30 ticks, it'll do the add. Now that's the simple way to think about it. What's actually going on is it's multiplying the ticks by the currency value per tick and coming up with $150. And if there's $150 of open profit in the trade, then it will do the add. Okay. This is important because if we start adding more than one, we have to decide, okay, well, how do I decide when it's okay to add a second one? So let's look at this case here. You'll see what I mean. If I'm going to add a third one, where am I going to do that? All right. If you think about what we just described, there's a pullback right there. Would you want to add there? I don't think you do. I don't think you want to add right there. Okay. I think up here might be okay. I'd like to add there on the break. And there's more distance, do you see? This distance here. Okay, so it actually gets a little tricky. And the reason it's tricky is that I can't actually see in the spreadsheet when did I last, what is the location that I last added, or at least I don't know how. And I can't just subtract from that and see, okay, now it's okay, I've moved enough to go. I have to use this open P&L right here, okay? And the problem is that I may have a lot of open P&L before I even get to the first add. And so if I did something like, well, $150 per contract, then you can add again. Well, guess what? I already have that when I've added here because this distance is so much. So the formula that I have is trying to make sure that you've had some movement before you do another add. I'm not sure that it's the best formula yet. I'm certainly open to suggestions. Okay, so the point is that we try to make sure that we have new movement in the direction of the trade before we'll add again. Okay? And I can show you the exact formula, and then you can tell me that I'm an idiot or whatever. Okay? We're not just going to indiscriminately add every time we see one of these patterns. We want to see more. The markets continue to move in our direction before we add again. Can you add 2 at the first add location? Currently, no. I don't know how to do that. Though I suspect it's not that difficult, Robert. But it would need some testing. Okay? And basically what you would do is put a formula in this cell here that says, I now want to do an add, so change it to 2. Okay? It would something like position quantity equals 0, then order quantity equals 1, else order quantity equals 2, something like that. I don't think it would be that hard, but I didn't go there, all right? All right, now, a couple more things, and then let's look at a very cursory test of these three different methods here: a single contract, adding one contract, and then adding twice. Okay. In the studies list, there are some new studies in here. Okay. There's one up here which is called zigzag. All right, that's this pink zigzag you're seeing. All right. Then there's 3 at the bottom, which are important. The one on the top you should just leave alone. There's nothing to do here. Okay, just leave it alone. All right. But the bottom ones are trail, break even on ad, target, move, and trail longs to zigzag, trail shorts to zigzag. There's 4, not 3. Okay. This is a study that Sierra Chart provides that lets, darn it, stop doing that. That, hang on, that lets you move things around. All these systems are trying to connect, so let's turn them off. It's going to keep bothering me. All right. So the way that we're doing this is we're calculating where these places are, and then we're using this Sierra Chart study to move the stops around. All right. So this one here, trail break even on ad, is the one that does the move the stop to the new break even level. Okay. And so if you don't want to do that, there's this field up here that says enabled, yes or no. You can just turn it off, and it won't trail to break even for you automatically. Okay. The target move is the other one that you actually might have to mess with. I would not expect you to be screwing around with the break even on ad trail method. You want to do that in almost all cases. Okay. The target move is, okay, well, when I add to the position, what do I do with the target? If you don't do anything, then the existing target that was in place from when you first entered the market stays in place. All right, so let's examine that. So if I entered here, all right, right here, let's line up our colors here. I entered right here, all right. And let's say I placed a target right there as part of my trade management, okay? If I don't do anything, when I add to the position, the target just stays there, and it just the quantity increases to 2. All right, it was 1 contract sell limit. Now it's 2 contracts sell limit if I don't do anything. All right. Now I didn't like that. All right, I want to move it out, or I don't want this contract here to have a target right there. That's not what I want. All right, and so what I can do is I can move this order out. Actually, I can move it anywhere, but what I want to do is move it out. And so the study target move will move that target as far away as I want. And what I put here is -80, which matches my target on the initial ad. Okay, so, or it should. This should say 80. All right. In other words, what I want to happen is I want to keep an 80 tick target even from my break-even spot. And so what happens is break-even's right here. The target moves to that spot plus 80, all right, which happens to be up here somewhere, okay? So it's the same thing. If you don't want that to happen, then you can just disable that like that, all right? This is important to know because when this releases, it'll be set up for someone that doesn't want to do any adding. So all these will be turned off. Okay. Otherwise, they might execute on you. Okay. Then you have 2 more cases, and these are the ones that trail the target. Trail the stop to the zigzag. So trail longs to the zigzag means trail the stop for longs to the zigzag. So trail to these pink bars. And it's the same thing. If for some reason you don't want to do that, just turn it off. Okay? This is the only thing you would touch in here is turn it off, turn it on. Okay? Same thing for shorts. If the market's falling, I want to trail to the zigzag, then this is enabled, and you'll actually see the stop move. All right. Much of this was demonstrated in last night's daily video, so you can see that. All right. There's one other setting in the spreadsheet, which is the Zig Zag Trail Offset. This is how many ticks below this point right here do you want to trail to, right? And so if you want to trail, one tick below that, then this number would be 1. I put 3 because I've noticed that it'll come and nick that level sometimes. Okay. All right. Let me see what else now. We covered ads, multiple ads, trail to break even, trail to the zigzag, move the target, how to turn it all off. All right, so now let's take a quick look at some very cursory results. The test was not they weren't completely correct. I had this set to 120 instead of 80, and I had this one set to 40 when I meant to be 20. But let's just look at it, and it'll give you a sense for how this works. I need more testing though. So the idea was to test single contract normal, adding 2 contracts. I'm sorry, adding once, so for a total of 2 contracts, and then adding twice for a total of 3 contracts. Okay. So I just did this morning, and it's the same thing. We need shoot, I can't get them all up, can I? Let's do it this way. Here we go. I need to do the test again because I had some errors in my settings. All right. And I need to do this for the baseline period as well. But this is just, I loaded up the 428 model or whatever it was, the model for the week before the beginning of May. And this one here is single contract. Again, it's supposed to be single contract with a 20 tick stop. Instead, it was single contract with a 40 tick stop. All right. So that makes 800 across 2 weeks, a little bit more than 2 weeks. All right. With, you can tell it was actually one of these kind of rough patches here. This day in particular, this week in particular, you get 3 in a row there. This middle one is adding, actually I have them backwards. This middle one is adding once. Okay. And you can see actually that the days where you're taking a loss are pretty much the same. But the days where you're profitable you're much more profitable. Okay. Like here it's double, here it's triple, quadruple. Here it's double again, almost double. Here it's about the same on this day. This one's interesting. We'll talk about this. I was expecting to see more of this case where you have a small gain in single contract and you're taking a loss on adding. I expect to see this more. And the reason is that when you add to your position, you're going to end up breaking even a lot more than on cases where you just trail to 20 ticks. All right. And so you'll get more small profit days trading single contract. And those days will often be, my expectation is those days will often be scratch to loss days when you're adding to your position. Okay. Because of that, we're taking the profit we got in that first contract and we're using it to fund a bigger position. And if it doesn't work out, we've given that money back. All right. And then 165 versus 640. This was yesterday. This is how it tests out. Now, let's take a look at, this is adding once. This is adding twice. Okay, so in our heads we think that's going to make a lot more money, but it doesn't necessarily work that way. And in fact, you make less for this period of, what is that, 15 days. Okay, still, that's a nice number. $2,400. If you made that, you'd be really happy. Your problem is you gotta stay the course when this is happening. You got 4 days in a row where you didn't make money, and you start freaking out. Okay, that's the difference. This is not that unusual if you go and you just look at the baseline period. We talked about this last week. Go look at December. It was an ugly month. You just had to stay the course. And then in January, you killed it. What I see people doing is this will happen, and then they'll start tweaking the system. And then they'll miss this day because they've been screwing around with the settings. All right. So you have to keep this in mind. The profile changes. You may discover that we have more days that are like these small loss or max loss days because we're taking the profit from that first contract, using it to fund a bigger one. And if it doesn't work out, we're scratching instead of making a small profit. So there's no small profits adding up for us. All right, but you can see the difference. Like, this is a huge difference. I'm assuming that there's not a major problem with the fact that I used the wrong stop trail on this one. But we'll do a formal analysis across this time period and then also across the baseline period to see. All right, and that's what the tool does for us, is that we can do that analysis. There's no subjectivity here at all. It's just a function of, okay, look at the data. So for 3 contracts, what you see is, you made just a tad more, $30 more here. Here, quite a bit, $300. All right, these losses are all the same. Here, you actually made a little bit less than the 2 contract. Okay, which means you added. The reason is that you added later. All right, and you ended up taking a loss on that contract you added. Okay, to the tune of about $180. This one's a little bit less, and then this one's a little bit less as well. Okay, so don't assume that putting more contracts in the market incrementally makes more money. You need to test that. Okay. These days all start at 7:05. Yes, that's a very good point, Larry. They all start at 7:05 to 9. That's what these tests are showing. The baseline test that I'll do for the December-January period will be 6:35 to 9. And it uses the model from whatever the model was just before this date. I think it was 4/28. In fact, here, we don't need to guess. Yeah, 4/28. All V-bar 2. Yes, Larry. Does the zigzag trail take precedence over the 40-tick trail? Whichever one's closer, Larry, is going to take precedence. What was the 3 for Larry, the other Larry? I don't understand your question, Larry. Larry B. Okay, so I think we have to consider these results tentative because I did have some errors in the settings. These were set for 120 instead of 80. This was set for a 40-tick trail instead of 20. I suspect this number might be higher. Maybe not, because sometimes you get taken out on a 20-tick trail and then you'd make more. But anyway, it's not pristine like normal results like this are with me. I just didn't have time to do it because I didn't finish this work until it was like last night actually. I think what Larry's asking is, what is this third one? This is adding a third contract. Okay, so the case on the right was where I had it's one of these. I had this set to max contracts with add was set to 3. In other words, I'll add twice. Okay. So what's going to happen is the days when the market is like on a trend day, if you're adding more, you're going to make a lot more. You'll get a lot more contracts in the market. You'll just keep moving that target out. The days where you get like a nice 100-tick run, then adding fewer contracts you're gonna do better, because instead of you'll end up adding a contract really late in the run, and then because that contract's gonna lose money is how it ends up working out. Okay, all right. So you're gonna see me live testing this in the room next week with two contracts. It's already been set up with the broker. Something to keep in mind, you do have to tell the broker that your max contracts are increasing. I have mine set at 1 because I'm super cautious. So now it's set to 2. There is actually one other setting that you have to deal with, which I forgot to mention. And that is in the studies. In the spreadsheet study, I think, yeah, maximum position allowed has to be increased. It's currently 1. So that says the spreadsheet will add up to 10 contracts is what that says. Okay. Now I have a control where I'm only going to add to, this number here. This number here. All right. So you could, that's a safety mechanism. This should be set to the same number as this, just to make sure. Okay. Now there's actually one other extra thing in here. Actually, 2 we should talk about. The system is trailing to the zigzag, right? It's trailing to the zigzag. There's also another system in the spreadsheet that's looking to see if you've crossed this level and are still in the market, and it'll flatten you. So there's an extra level of protection if for some reason the study is screwing up and not moving the stop correctly. All right. And then finally, there's something new that I added here. That's maximum trade loss. That's a protection for a case where you don't have a stop in the market for some reason. Then the spreadsheet is looking for cases where you have a position and the loss is bigger than this amount. It'll flatten you. Okay. So if you're trading more than one contract, you need to update this value, or the spreadsheet's going to, as soon as it sees a $60 loss, it issues a flatten. Okay. So this takes care of those cases where either, there's a mistake in the studies, a mistake in the system, or we have cases where the market's moving so quickly that by the time we place the stop, it's already invalid and the servers reject it. Okay. So this is an extra level of protection. All right, your final level of protection, of course, is the daily risk limit at your broker. But I'm hoping that with this in place here, you'll never get there. All right, because anything that does go wrong will get caught here. Okay, that's all I had for today. You'll see me live trading this next week and then dealing with any issues. I did live trade it yesterday, but didn't see any cases where I added, unfortunately. And my plan is to release it next weekend with next week's models. All right, barring any major problems. It looks pretty solid at this point, but we'll see. So basically what we've got here is a fully automated system that's intended to, it uses the machine learning to get into the market, and then just uses movement to add to the position, all completely automated. Okay. Once I get this kind of locked in, I'm gonna go back to machine learning, and there's some things I want to do there that are related to. There are other modeling things I want to do to work on improving the predictions, and then there's lots of sort of interesting things to do related to making the decision on the ad. So we're using machine learning to get in here. Oh, by the way, this is the example we just looked at. Here's the same example, but with 3 contracts. So we add one here, we enter here, we add one here, and then we add a third one here, and then off it goes. All right. But anyway, I have some ideas about making the decision to add from a machine learning perspective, as opposed to just what we're doing here. And you can hold on just a second. Again, I'm going to sneeze. So that's it for today. One way to look at this is if you consider that the market has some level of randomness in it, and on the days when we're getting whacked like this, that's the randomness getting us. Okay, on the days when that's not happening, let's take more advantage of the movement, and that's what's happening here. Okay, so let's do that, and then once I've got this locked in and like the way it's working, I'm going to go back and see, okay, what can I do about this? Can I reduce it or not? It's a function of how much of the market is truly random. All right, that's a discussion we'll have. That's a webinar in the making here about how much can you expect to get to a point where you're reducing the max loss days down.